All right. So, again, we'll get started. And to those of you on Zoom, welcome. Welcome, everyone. I'm Don Samford. I'm a member of the Board of Directors and Program Chair of the World Affairs Council and your moderator today. On behalf of the Peoria Area World Affairs Council, the Turner Center for Entrepreneurship, and the Office of Global Studies and Initiatives at Bradley University, we're delighted to see all of you for this lively discussion of tariffs, U.S. manufacturing, and crypto with Josh Lipsky. Now, Angela Weck, our executive director, and we'd like to thank her. She's actually in a World Affairs Council of America board meeting at the moment that came up after we scheduled this. And thank her for setting almost all of this up herself, and our intern, Sarah Denton, thank her as well. This meeting is a hybrid event with several people here in the room and many more online. For those of you online, please type your questions in the chat. Sarah will let me know what they are at the Q&A time. If time permits, you will be allowed to unmute and ask a question, but we'll try to cover as much ground as possible, which probably means for the most part to avoid speeches. We'll probably read most of the questions off then. Also, for those of you online, please turn off your video. It will help us preserve the bandwidth for this meeting and improves the quality of the video. With that, let me introduce our guest today. Got my hands full with the microphone and reading this here. Very excited to have Josh Lipsky, of the chair of the International Economics at the Atlantic Council and the senior director of the Atlantic Council GeoEconomics Center. I highly recommend that you go and look up the Atlantic Council and go find the GeoEconomics Center. I've found some really great information on there. He previously served as an advisor at the International Monetary Fund and speechwriter to Christine Lagarde. Prior to joining the IMF, Josh was an appointee at the State Department, serving as a special advisor to the Undersecretary of State for Public Diplomacy. And before joining the State Department, Josh worked in the White House and was tasked with helping plan President Obama's participation at the G20, G7, and other global summits. He also worked on Capitol Hill and the Daily Show with Jon Stewart. And I have a former student, Dan McCoy, who was a writer. I don't know if you cross paths with him or not. So, but it's exciting. He is a term member at the Council on Foreign Relations and an economic diplomacy fellow at Harvard University's Belfer Center for Science and International Affairs. In these roles, he has advised policymakers on a range of emerging challenges to the global economy, including trade wars and the reform of the Bretton Woods system and the rise of digital currencies. I'm going to do this where I can turn things a little faster. And lastly, his analysis, writing, and commentary has been featured in the New York Times, the Financial Times, the Wall Street Journal, the Washington Post, CNN, Bloomberg, and CNBC, among others. He is a licensed attorney, and he holds a JD from Georgetown University Law School, master's degree from the Harvard Kennedy School, and a BA from Columbia University. So, impressive credentials, Josh. And thank you.
That was very kind.
Yeah, thank you for being here with us today.
Happy to be here. Sorry to not be there in person.
And well, another day we'll try to get you to see how you play here in Peoria in person then.
Yeah, Washington's a little crazy right now. Hard to get away.
Yeah, it is. There's always, every day, it's amazing how something new is popping up. Well, let's go ahead and start with tariffs. So my first question to you is, and so that especially if we've got some younger people in our audience, what are tariffs and how have they been historically used?
Yeah, it's a great question. And I do think it's important now, given there's so much tariff talk in the news. What is it? What's the history of it? And how are we using it differently in the United States, or similarly to how we and other countries have used it in the past? I won't go through the whole history of tariffs, but you can go back almost 2,500 years to the ancient Greeks, the Romans, and look at the first real documented use, at least, of tariffs, which are essentially an import tax. All a tariff is saying we are going to charge you a different fee as a foreign exporter of a product than we are going to charge a domestic producer of a product. And that's been applied differently over the centuries in different governments, in different regimes, different monarchs. We sometimes think the use of the word tariff, it's an Arabic word that means list or index. We think it could come from the town of Tarifa, which is in the southern coast of Spain near Gibraltar. They in Tarifa, back in the 1400s, used to stop ships that were coming through and charge ships, if they weren't from that municipality, an extra fee. A little of this is apocryphal and hard to document, so we don't know if it exactly came from there. But the point is, the concept of tariff is very old. Now, in the 1800s in the United States, as we were growing as a global economy and becoming stronger, we started using tariffs significantly to protect our manufacturing sector that was on the rise here in the US. And there's a series of tariffs. There's the tariff of abominations in the 1830s, and then later in the 1880s and 1890s, where tariff rates got very high in the United States, something like 20% or higher from the US on the rest of the world. This culminated in the 1930s with the Smoot-Hawley tariffs that some of your listeners may be familiar with. We learned about this in school. This was the height of protectionism in the US, where we basically, during the Great Depression, said we want to put up barriers around the rest of the world. We want to protect our economy. But unfortunately, those tariffs just deepened the Great Depression and prolonged it. And so when we came out of World War II on the other side of all of this conflict and economic pain and military, we said we want a different global trading system, one that lowers tariffs. And that really is the world we've been living in, with some exceptions, over the past 80 years. And now we're in the United States in a very different reality. So hopefully that's helpful. Very quick overview of how we got here, and we can dive into some of the details that I may have glossed over.
No, that was great. So now we're going to move to Peter Navarro and Trump. And Peter Navarro's economic view of things is so different than anything that I ever learned or taught about. So can you share with us how Trump and Navarro explain tariffs and how they're using them?
Well, I think you're hitting on a key question, which is how Trump really understands tariffs and thinks about tariffs. First of all, tariffs are core to Trump's political belief system, and I think this is often misunderstood. He has been a believer in tariffs since the 1980s, when he first started emerging as a political actor, going to the Republican National Convention in the 1980s. So this is deep-rooted for him. It's one of his original political policy platforms. And it doesn't have to do with China back in the 1980s, of course. It has to do with Japan. Japan is the rising power. Japan is the country that was buying up a lot of real estate in New York at that time in the 1980s. This is where I think some of Trump's views on tariffs were originally formed, and he has held steady on that belief from the 1980s to today that tariffs are an effective economic tool. But he and Peter Navarro both have a view of the world that divides tariffs into three buckets, and I think this is often misunderstood when it comes to tariffs. The first is tariff as negotiation. And we saw Trump do this often in the first term. He uses the threat of a tariff to get to some kind of negotiated deal. And he is certainly doing that in the second term, but he is also moving into two other buckets. The second bucket is tariff as macroeconomic tool. That's either to reshore domestic manufacturing. This is actually the true use of a tariff, the original use of a tariff going back hundreds of years. You put a tariff on other countries and other companies, and therefore you, in theory, reshore domestic production of a product. Or, and this is how it's being used right now, raising revenue. The tariffs are raising a lot of revenue, somewhere between maybe 200 or 250 billion a year. Tariffs can do that. Now, it's important to understand, if you're raising revenue, you're not reshoring. There's a conflict here, because if companies are willing to pay that tariff, that means they'd rather eat the cost than reshore domestic manufacturing. So with tariffs, you're trying to find the right balance between what's the right rate to maybe encourage them to reshore, or if you want the revenue. The final way Trump and Navarro look at tariffs is tariff as punishment. Tariff is a form of sanction. So Trump is moving away from financial sanctions in the second term, sanctioning different countries through the banking system. And instead, he's using tariffs to punish countries when he disagrees with their policies. Brazil is a good example of this, right? So we have a 50% tariff on Brazil right now. That's not really about what Brazil is exporting to the United States. That's because he disagrees with what the current Brazilian government is doing to Bolsonaro, the previous president. So three different ways to think about tariffs: negotiation, macroeconomics, and punishment.
I think Alexander Hamilton would be in shock right now. So,
I think a
uh,
lot of economists
yeah,
would be.
yeah. But I think about how he wanted to use the tariffs at the beginning and would never, I think, have expected this. I've also put down, you've kind of answered this already, but as an economics teacher, I was unable to see a plan or a sensible use of the tariffs, especially how the percentages were determined. And then they're on, but then they're not on.
Yeah,
They're
yeah.
announced, but then they're never applied. And Corey Shakey of the American Enterprise Institute stated she focused on the negative aspects of the economic policies that the Trump administration put into place. And she says, I'm genuinely shocked that nobody in the Trump administration appears to have passed Econ 101 in college, she said. Can you help me understand? Is
Well,
there a plan, or is this just, as Trump says, I do things by my gut?
let me present to you what I think is their view of it. So not necessarily my view, but what I think their view is, having spoken to them. First, they believe the global trading system is broken. And I think they have some legitimate grievances on that front, going back long before Trump's first term. Deep flaws in the global trading system. China is one problem in the global trading system, but only one. Unfair treatment of the United States in global trade. The White House would say the US being taken advantage of over decades. So they start from the basis of there's a problem. Okay, and I think there's general agreement on the fact that there's a problem. Then the question is, what is the solution? Their view of it in this administration is tariffs are part of the solution. If we tariff countries at the right rate, we will either get them to change their policies toward us. So this is tariff as a kind of threat leading to negotiation, and it will lead to more revenue and jobs here in the US. Or if we don't get them to change their policies, it will be so economically painful for them that over time, because of our bilateral leverage as the United States, the largest consumer market in the world, they will have to change their policies. So I think if you were to give their view of the world, it's that the global trading system is broken and tariffs are a way to fix it. I think that that is a problematic execution because ultimately, who pays the cost of tariffs? It's not the other countries, it's our companies who are importing, and that will get passed on to Americans at the end of the day. It doesn't get passed on one for one. Just because you're paying a 15% tariff doesn't mean a company charges you 15% more. But check out your cup of coffee, your Starbucks over the last 6 months. Have you noticed a higher price going on here? I think most people have. Check out furniture, check out a range of products. So things do have higher costs because of tariffs. And ultimately, the question is, from the Trump administration view, they think other countries and companies will bear the burden. I think economists believe Americans will bear the burden. And this is the debate that's playing out right now.
Good answer. Thank you. Trump said that he would have all the trade deals done by now. What happened? And as I follow this, they announced trade deals, and then I find out later, well, they're still working on it. And then it seems like a lot of this doesn't get firmed up, like an investment from foreign countries into the U.S. It's kind of like China promised to buy a bunch of soybeans, never
Yeah,
did, and so on.
that's right.
Can you elaborate on that a little bit?
Yeah, well, trade deals, as many of us know who work in this space, are hard to negotiate and they take years. So what we don't have is actually a lot of trade deals. I would call them, trade agreements in principle is the way to think about it, with about 15 countries right now, maybe a few less than that. And these are agreements for purchases, for investments. And there are a lot of questions whether countries will follow through on those big commitments they've made, sometimes in the hundreds of billions of dollars of investments in the United States, if you think of what Japan's agreed to, for example. And I think there's a bit of a misconception here between what other countries are trying to do and what the Trump administration is trying to do. So if you notice, a lot of these deals say, we're just going to do this for the next 3 years, and after that, we'll see. To me, that indicates that they're just trying to get through the Trump administration and then renegotiate with a future president. But I think other countries are actually misconstruing how much we've shifted in the United States. When Trump came into office, there was a 2.5% effective tariff rate from the United States on the rest of the world. There's now something like a 16 or 17% effective tariff rate on the rest of the world, and it's only going higher. And I don't think we're going to go back to 2.5% in the next administration, whether that's Democratic or Republican. I think we're going to live with higher tariffs for the long term. And so countries are just trying to do short-term deals with Trump and not realizing the global trading system has really been reshaped in the span of less than a year for the long term.
Yeah, you and I had mentioned that Biden, in fact, kept most of Trump's tariffs on and then
That's
added
right.
more of his own. So there's been a continuation between both parties. So again, if you're a foreign country, I don't know that you have any reason to think anything's going to change in the near future. Your thoughts?
It's a big shift from where Washington was even when I served in the Obama administration and we were talking about regional trans-Pacific trade agreements. This has been a shift bipartisan across Washington towards more protectionism. And so it's not just about Trump. Trump wields this tool in every country in every way. I think different presidents would use it much more scalpel than sledgehammer the way he does it, but the tool is not going away. And I don't think we're going back to a totally open market situation, which is what 2.5% effective tariff rate looks like.
As you said, we're pulling a lot of revenue in, and given the size of the national debt, which I believe is getting pretty serious, given the amount of interest we're paying on it now, are tariffs a good choice to raise revenue and help pay down the debt?
Well, it's a very good question because right now, when Trump introduced the Liberation Day tariffs in April, the bond markets in the United States panicked, and this caused him to retreat on the tariffs. And now it's so interesting because he is back to close to the rates he threatened on Liberation Day, and those rates are in effect, except the bond markets want the tariffs to stay in place. And if the Supreme Court overrules his authority on tariffs, which may happen in the coming months, the bond markets will panic in the opposite direction. Why is that? It's because quickly in the United States, we've become addicted to the tariff revenue, meaning that once the One Big Beautiful Bill passed, the bond markets realized we need the tariff revenue that's going to be generated over 10 years to help us maintain a fiscal situation that otherwise would be untenable. But it's important to say the tariffs are only one piece of the fiscal situation. They don't solve our fiscal problems in the United States. Even if they end up raising 3 trillion, as some project over 10 years, that's still only a fraction of what we need to do in this country to get our fiscal house in order. And if tariffs cause slower growth in the United States, then it will lead to less tax collection domestically, which will then hurt the fiscal revenue on the other side. So tariffs are a double-edged sword in that way, and I'm not sure they're going to solve our fiscal problems one way or the other.
I know the Supreme Court case is going to be very interesting, just from the standpoint we've got a constitutional issue again. Clearly, it states Congress tariffs. I think the question is so many things. Can Congress simply abdicate its constitutional responsibility? That's another session for another time, though. We could be in that one forever.
Yeah, I'll just say one thing on that. In law school, we always learned that Congress does not put elephants in mouse holes, meaning that if Congress wanted to give the president the authority to tariff any country at any time for any reason, they probably would have specified that. And so we will see what the Supreme Courts decide, but that is really the issue at play before the court in the coming months.
Yeah, it strikes me that Trump and his administration does the old adage, go ahead and do it and then ask forgiveness later. And they're doing that with so many of their actions. Well, let's just do it. And then if they tell us we can't, well, you're going to bring great harm. So even though it may be unconstitutional or whatever, you just can't change it.
And you see the president saying this now, and Treasury Secretary Bessent saying, look, we negotiated all these trade deals based on this threat, so you can't take it away from us because the entire system will unravel. They're kind of making that argument now to the Supreme Court.
We're going to finish on tariffs with, I found a great article that you wrote, I think was back maybe spring or early summer. And you said in the span of 7 months, Donald Trump has remade a global trading system that took over 70 years to construct. The demolition and reconstruction has been easier than even the U.S. president himself likely imagined. That's because other countries have been willing to quickly ditch the rules-based trading order that just a few years ago many professed was the bedrock of international economic prosperity. I'd like you to expand on that.
Yeah, well, I thought about this a lot after President Trump negotiated his deal with the EU, because the EU, the European Union, has been the sort of upholder of multilateral trading system. They always say we have to have a rules-based international system. And even when Trump threatened the Liberation Day tariffs, they said, we will not negotiate under this threat. But lo and behold, a few months later, they had reached a bilateral deal with the Trump administration based on the tariff threats. So what happened here? Of course, Trump was exerting his leverage and power as the US president. There's no doubt about that. But I also think what I said before is true, that there were a lot of frustrations from other countries about the trading system, frustrations over China's role in the trading system, frustration over how other emerging markets are treated in the trading system. And my point was that you can't just break an entire trading system that took decades if you don't have two partners who want to do it. So it's not just because Trump wanted to do it. That was the driving catalyst behind it. It's also because other countries saw that they might have their own interest at heart in changing this system. Now that remains to be seen what system comes out of this, because right now we're just creating sort of bilateral negotiation between countries. That's not a global trading system. And we're not really touching services, digital, right? How a lot of information is transferred from Google and Amazon and Netflix and otherwise. We're just talking about goods trade. So we're only talking about one part of the trade equation. So a lot of questions to be answered, but I don't think we're going back, is the bottom line. And I think it's because both sides want it that way.
And I had mentioned to you again before we started, to me, it's amazing the rejection of President Reagan and Margaret Thatcher and their move for free trade in the 1980s. And now we're pretty much doing a 180.
Yes, they would be shocked to see what's going on right now on the trading system. It is night and day from where the consensus was in this country even 20 years ago, let alone 40 years ago.
Well, let's get into the reshoring and trying to keep manufacturing here in the United States. How successful were Trump's tariffs in the first administration, and so far in bringing American businesses back to the United States to produce their products? So we have one administration under our belt
Yeah.
to see the results.
Yeah, and we should say that the tariffs done in the first Trump administration were so small in scale compared to what's being done now, it's not a great comparison. So a lot of people say, well, he tariffed washing machines, for example, in the first term from China, and the prices of washing machines didn't really go up, so therefore tariffs won't be inflationary. I just don't know that you can draw those kind of conclusions because we are now tariffing entire sectors at 25 or 50% and entire countries at 15%. So it's hard to draw apples to apples. One thing I will say is that we had steel tariffs in the first Trump administration, and it did create a small amount of new steel jobs in the US, but it cost jobs that are downstream from steel production because of the higher cost of importing that steel. So this is the point that tariffs are complicated. Maybe you benefit one sector, steel production in the US, but the other people around the country who rely on steel, maybe those are auto manufacturers, that's construction, the entire economy in the US that relies on steel inputs, they were paying higher prices and lost jobs. So the net in the first term were that the tariffs cost jobs, but they were not highly inflationary. And the jury's still out on the second term is the bottom line. But the tariffs so far have not been as inflationary as many economists expect. You can either say that's a win for the Trump administration, or you can say it's too early to tell. I'm in the latter camp, but we will see.
I can't help constantly think about when I ever hear about these kind of policies, the law of unintended consequences, that they're just not that big picture look, that they get narrow focused. And you're right, you have all these other consequences that take place economically. Let's get into the big one, though. What are the challenges for businesses to reshore their operations? And most of those are the same challenges for businesses currently in the U.S. So
Yeah.
can you share what these difficulties are?
Yeah, well, this is really the fundamental question because why are we doing tariffs in the first place, right? I said there are different reasons Trump has, but one of them, and certainly one of them he talked about frequently in the campaign, was to rebuild American production and manufacturing. So therefore, you have to ask, are they doing that? And this is where the tension between the revenue collection comes in. Because if you need the revenue to meet the fiscal situation, you're by definition not reshoring the jobs. And I think that's going to be the case going forward. Most companies don't feel that they have enough certainty about tariff policy to say they're going to redo their entire manufacturing and supply chain system built over years, right? So imagine you're a company operating now in France or in Thailand or in Vietnam or in Mexico. Do you feel that there's enough stability in the tariff rates, given the volatility we've seen between April, May, June, July, to say, you know what, I feel really confident the tariff rate on my company is going to stay at 10% for the long term, and therefore I can rebuild my business around that in the United States? If you knew that that was going to hold for a decade, you might be able to do it. But the volatility of it, I think, makes companies really wary to do the uprooting that's necessary. And so in the meantime, I think what you get is companies paying the cost, even if that cost fluctuates and even if it hurts their bottom line.
How about skilled workers?
Well, the skilled workers question has been a long debate here in the United States, and we don't see the investments that are needed right now to match what you would actually need for the manufacturing. And you saw this with TSMC. This was a great example. In the Biden administration, they opened up new TSMC factories in Arizona, but TSMC complained to the Biden administration that they didn't have enough skilled workers to fill the factory on semiconductor manufacturing. So this is a scale-up project that can't be done overnight. There are a lot of investments that have happened over the past decade, but we're just not there in the United States. Now, of course, the domestic reshoring doesn't happen overnight either. So maybe the skilled labor force can meet the demand on domestic reshoring, but you're not going to have those incentives align until you have a steady and stable tariff rate policy, whatever that is, that companies can rely on for the long term.
I know one thing we always used to teach in economics was that when you put the tariffs on and the U.S. company or any foreign country's business, they don't lower their prices. If the other companies are higher, they don't go, well, we're starting out and then we'll get more efficient and we'll really lower and so on. So that becomes an issue for cost.
That's right. That's right. I mean, this is, we are challenging all our assumptions about tariff theory that we learn in school. And so I take this all with a lot of humility. The things we thought to be true about tariffs may not be true. We're running this grand global trade experiment in live time. And what we learned a lot with China, for example, when we were at 145% tariff rate during May, was that both sides were much more vulnerable than they realized, right? So the Chinese were losing hundreds of thousands of jobs per week when we were in the trade war with China in the spring. And we were staring down the possibility of empty store shelves at Walmart and Target and others coming to back to school season over the summer. So I think what you learn in this whole process is the things you thought to be true are different when you play them out in real time. And both countries, and not just the US and China, but I think every country in the world are learning that right now as we go through this new trade war.
As always, the joy of teaching economics, because so much of it was theory.
Yeah.
I say, well, as far as we know right now.
I never thought, when I did Smoot-Hawley tariffs in school that we'd be living through the same tariff rate again, but here we are.
I'm there with you. Yeah, I would have told my students, no, that will never happen.
Yeah, exactly.
Well, let's get into one of the issues of reshoring and keeping businesses here. The current Trump administration's policies on immigration appear to be at odds with getting business to invest in the United States. But now we're hearing, is Trump changing some of his positions on immigration for economic reasons? Where are we, or is he going both ways?
Yeah, we don't know. It's very hard from the data to understand what's going on. There's a case to be made that some of the reason we've seen weakness in the job market has to do with the immigration policies, but there's data that also points the other way, given the sectors that have been laying people off. And I just think it's too early to tell and too noisy. I know this isn't a great answer, but we just don't understand exactly how the immigration policies are affecting the broader labor market picture in the US. It is true that some sectors, including in agriculture, have directly said to the president, you are hurting our businesses with these deportations, and we can't do what we're supposed to do and bring these products to the line here with a labor market that's changing overnight. And you saw some back off in some sectors temporarily, but then you saw it surge back up. So I think there's a lot of confusion right now over the immigration policy, and it's unclear on its effect domestically in the economy.
How are tariffs and trade agreements and global supply chains interconnected? I'm reading so much about the having to reconfigure global supply chains.
Well, the idea of tariffs is that you put these tariffs on, and then countries will have to reconfigure their global supply chain. Secretary Bessent has talked about this. Now, that really has to do with China in particular. And if the Liberation Day tariffs were more organized to counter China, I think you would have seen a much more effective result on the other end of that. Meaning that if the Europeans and the Brits and everyone else had gotten on board to say, we are going to tariff China at this higher rate, and countries who are doing transshipment like Vietnam through China, then you could have seen a real change in supply chains and countries and companies being encouraged to think differently about where they manufacture. But that's not really what's going on. We're tariffing our friends the same way as we're tariffing our adversaries. I sometimes say that Trump doesn't view the world in terms of allies and adversaries, but instead in terms of bilateral trade surplus and bilateral trade deficit, meaning the EU is as big a problem for him as China is. And I think some of the tariff policies reflect that. And that just means at the end of the day, you're not going to see a reorienting of global supply chains. You're not going to see companies saying, well, I need to get out of China and move to this country, because those companies don't know that that other country is going to live in a lower tariff rate than China does for the long term. And so they just don't have the confidence to spend all the money required to change their whole production process. If it was a high rate on China and a low rate on the rest of the world, you might have it. But as it is now, you just don't have the incentives there.
You've helped me put in a plug for our November 13th program, in which I have Ambassador Mark Grossman, Ambassador Alina Romanowski, and James Lindsay from the Council on Foreign Relations to talk about the world the United States built and now the world that the United States is tearing apart. And we're really kind of going from that unipolar world to a multipolar world. And
Yes.
you're exactly right. We're seeing it's not, doesn't matter if you've been an old ally, you're a competitor now, and so you need to be in charge of your own region. So, yeah, we have a lot more we're going to be discussing on
That
that.
sounds like a great event.
I'm excited. Yeah, I think we got some great minds on that one as well. Lastly here, and of course we could talk a million things on the reshoring, but one that strikes me is here in the United States, to compete globally, we American manufacturing moved to the southern states first,
Yeah.
because no unions, lower wages, less benefits. Then they move to other countries and they keep shifting, moving from China to Vietnam. And we're always trying to find that lowest price. So to compete for global markets with foreign businesses, are American workers going to have to accept lower wages and benefits? And American consumers then are going to have to accept that there's going to be higher prices if tariffs are kept on.
Yeah, it's a great question. And I do think the second part of your question is true, meaning that if tariffs stay on for the long term, as I think they will, Americans are going to become more accustomed to higher prices than things they were expecting. TVs are a good example of this. We became very used to in this country over the past 20 years of relatively cheap flat screen TVs. So things like that will change over the coming years if tariffs stay. Now, the question is really about the wages on the other side of the equation. I don't think people are necessarily going to accept nor have to accept lower wages. I think this would cause all kinds of problems from an employer standpoint. I do think you might see wage growth slow, right? So you might not see the same level of pay increases as we've been accustomed to. But the big dynamic there is less the tariffs than it is AI, right? Than it is productivity growth. What are companies able to do in efficiency with AI that they weren't able to do before? And if they are able to generate more profits, do those get passed back to their employees? Do they get sent into dividends if they're a public company? These are the questions for me that will drive employee wages in the years ahead, even though prices will be dictated more on the tariff side.
Great observation. Now, I've thrown cryptocurrency in here because as I've studied this is really, when it first came out, I was skeptical that anything like this that wasn't backed, by Federal Reserve and so on could ever take off. Well, we're seeing changes in legislation, more and more banks, investment firms investing in crypto. I mean, it really is leaps and bounds. So first, if you could just, as best you can for us old people, what is blockchain technology? How does
Sure.
crypto fit in it? And how does it derive its value?
Okay, I'll do my best in a quick version here of what we call Crypto 101 at the Atlantic Council. So the best way to think about this, if you're kind of starting fresh at it, is to think of crypto in three buckets. The first is what I like to call pure cryptocurrency. Bitcoin is the most famous example of this. There are many types of cryptocurrencies. And all that is essentially a currency that's built on blockchain, which is a ledger, right? Think about a ledger, think about a way you keep tap of records in the old days, different ledgers of different inputs, but it's a publicly viewed ledger. So everyone on it can see all the transactions in real time. But the value of Bitcoin is based on scarcity. It's not related to the dollar and it's not related to the yen. It's only based on the fact that there's a limited amount of it and people want it, not unlike gold. So that's the way to think about pure crypto. The second bucket is stablecoins. Stablecoin uses that blockchain, that ledger technology, but it attaches its value to something stable, almost always the dollar. And therefore, you know the value of what you have because it uses the technology of cryptocurrency, but its value is whatever the value of the dollar is. So it's stable in that way. The third bucket is central bank digital currency. This is central banks saying, well, hold on a second. If private companies can start issuing on the blockchain, why can't we, the central bank, turn our dollars and euros and yens and pounds into blockchain-based fiat currency, central bank-backed currency? And some central banks are doing this and some are not. We are not in the United States. But if you think about those three buckets, pure crypto, stablecoin, and central bank digital currency, you at least have an overview of the crypto ecosystem.
That was actually really good. Nice job. I think I think we do have an age, and I think also if you're an engineer, it helps a little bit with understanding the dynamics of how crypto is formed and so on. Can you explain what some of the current legislation is in our Congress?
Yeah.
There's been quite a bit going on now with crypto.
Yeah, this has taken up a lot of our summer here in DC. So there were two bills. One was the Stable Act and one was the Genius Act. So you get it stable and genius, right? That was the idea. And they were really about regulating stable coins. That's what they were. So this isn't about pure crypto, the Bitcoins, and this wasn't about central bank digital currency. This was about stablecoin. And the purpose of that legislation, which the president signed about a month ago now, signed into law, was to say that if you are issuing a stable coin, you need to make sure that you have the backing of actual dollars that you're holding to cash that out, right? So if I'm issuing a stable coin to you, Don, and I say, here's a dollar, Don, and you say, well, how do I know you have a dollar? I now have to publicly report to you how much cash and treasuries and others I hold in reserve to show you that what I'm offering to you that is stable is truly stable and liquid as an asset. And that's really what the legislation was about, making stablecoin stable is how I would describe it, which works for the US companies, except a lot of stablecoins are issued overseas. In fact, about 2/3 of them are issued overseas, and they're not beholden to this law. So there's a lot of risks still with stablecoins, and buyer beware is what I would say.
All right. Now, Trump once said crypto was a terrible investment and should never be used. Does his and his son's huge investment in crypto explain his change of mind?
Well, that was the first term, and a lot of things have changed in the second term for the first term, probably most notably the crypto policy. I'm not going to weigh in on the son's investments and the crypto market. Everyone could, read all about it and see what they're doing and make their own judgments. What I will say is that crypto has become a much more important economic actor over the 6 intervening years since when that comment was made. So he's had a change of heart on it. What drove his change of heart, I can't really say, but he's not the only one in Washington who's had a change of heart. I will say that. And I came from the IMF, where they were also very crypto skeptical, and they themselves at the IMF are now becoming much more, at least I would say, reconciled to the idea that crypto is here to stay, though they certainly don't embrace crypto the way Trump is doing.
Well, that gets into my last question here. Crypto was once known as the currency of choice for criminal, terrorist, and dark web transactions. And I think that's what many people still think, that it's a shady type of thing. But today it's continuing to gain strength as a viable investment. Some investment firms are exploring the possibility of offering this to clients. Leading investors and some of the biggest banks, investment companies, as I said earlier, are now including cryptocurrency in their holdings. I know my holdings are with Edward Jones, and they're beginning to take a serious look because some of their investment counselors are invested and have been invested. And they're allowing their investment counselors to take on clients who are invested in cryptocurrency, manage it, even though Edward Jones doesn't provide for it. We're seeing, as you said, that real movement. One thing that my investment advisor told me is governments are missing out if they don't get on this as a thing to tax. Once you can, record, follow these transactions, this is a good tax base here to use in the future. So thoughts on any of that?
I agree with that point of view. I mean, once you tax and regulate something, you also legitimize it, right? You bring it into the formal economy in that way. And I think the crypto companies recognize that. And many of them want to be regulated because they want the sort of imprimatur of the government to say, well, if you're taxing us, then we're legal. And therefore, we're not illegitimate and illicit and the things that have been attached to crypto. And some companies want that and some don't. What I would say about crypto is if you think about the evolution of that market, it's become very mainstream in banking. A lot of banks now bank the crypto companies, so they hold their assets at the traditional commercial financial institutions. I think that the crypto economy is now integrated with the traditional economy in a way that if there was a problem with the crypto economy, you might have to see the Federal Reserve or a regulator stepping in to stabilize it, just like they do with a bank that might fail. You saw this with Silicon Valley Bank a few years ago as an example of this situation. So I think we've quickly gone to a situation in the United States, for better or worse, crypto's gone mainstream. It's part of the US economy. It is increasingly being regulated as part of the US economy, but that doesn't mean there aren't major financial stability risk ahead. And I do think at some point there is going to be a drawdown, a sort of reconciliation on some of the high valuations of crypto. That doesn't mean crypto is going to go away, but it may come back down to earth a little bit.
All right, thank you. One thing that I didn't get into, but we probably should just briefly mention, since Peoria is the home here for Caterpillar. Obviously, for Caterpillar, with exports, a lower dollar is very helpful to them. On the other side, though, if you get a tariff war, it's coming back and hitting them. But can you briefly mention something about the dollar valuation? Because it's something, again, economists are good, bad. Are we going to lose our dominant currency? What are you at the Atlantic thinking?
Well, I will make a plug for our dollar dominance monitor. We just updated it yesterday. We do this quarterly, and we can share it with everyone that looks at exactly this question about the future of the dollar. Now, traditionally, macroeconomics would teach you that if you introduce tariffs, the dollar should get stronger. That actually didn't happen after Liberation Day, and there's all kinds of debates on why that didn't happen. And a weaker dollar, of course, as you said, it can help our exporters, but it obviously is hurtful to our importers. And so the question about the future of the dollar is, do we want to be the reserve currency of the world? Now, it was basically orthodoxy and universally accepted for decades in the United States that, of course, we want to be the world's reserve currency. It gives us enormous financial power, political power, military power, influence on the rest of the world. It also gives us cheap credit, right? Our ability to have a 30-year mortgage fixed rate in the United States. Most countries don't have that kind of benefit. So we enjoy enormous luxuries in the United States by being the issuer of the world's reserve currency. There's been a bit of a shift, and J.D. Vance is one of the people who believes this. Stephen Miran, who's just confirmed to the Fed this week, believes this, that maybe we shouldn't be the world's reserve currency, and maybe we should have a little bit of a weaker dollar. Now, that debate's playing out now in Washington. I think the president still believes in a strong dollar. He said this several times, so I think that's his view. So I think the consensus that the world should remain connected to the dollar, that the dollar should be at the heart of the global financial system, and the dollar should remain strong, hasn't changed. But there's a bit of a shift in the debate in Washington just over the past few years. My view is that being the world's reserve currency, while it does carry burdens, because you have to run current account deficits when you're the world's reserve currency, it confers more benefits than burdens. And we shouldn't toss aside lightly what took us a century to build, which is basically being the stabilizing force of the global economy.
Before we get to audience questions, Josh, I want to thank you for your very succinct and very educational answers. I'm one who sometimes gets too verbal and gives an answer, goes way beyond what I need to. But you are one of the best that I have ever run across of giving good, clear, concise answers. So I thank you for that.
Oh, that's very kind. Thank you. Well, thank you for the great questions.
All right. Bob Yonker, I'll do a couple online, then we'll see if some of you have a question here. Bob Yonker asked if you can come up, or do you want me to start at the top?
I think.
Sure. And then we'll work down. Let's go to the oldest questions. Okay. So those people don't have to wait. Have any other presidents invoked tariffs from the executive administration for negotiation or for punishment?
Yeah, it's a great question. So Trump is the only president to use IEPA, the International Emergency Economic Powers Act, to invoke tariffs. IEPA was passed in 1977. It's primarily been used by presidents to introduce sanctions on other countries, not tariffs. He's the first president to use it for tariffs, and that's what's being challenged in the Supreme Court right now, whether IEPA authorizes him to do that. Other presidents have used tariffs for national security reasons. President Obama did this. President Trump did it the first time. President Biden did this. There are different authorities, including what we call Section 232. It's a national security ground. Now, you can't just tariff a whole country, but you can tariff a specific sector. So the reason we have steel and aluminum tariffs going on right now are because of Section 232, national security grounds, that President Trump and other presidents has said that these are a national security priority to protect our steel industry. So Trump is doing something that no other president has done, though the concept of using tariffs for national security is not new, though it is new relative to 15, 20 years ago. It's not something that you would have seen really back before that. Other presidents have done tariffs. President Nixon did tariffs as well, 10% tariffs in the world, but not justified on national security grounds, more justified on global economic competition grounds.
Yeah, I think again, back to my political science side and having taught the Constitution for almost 50 years or more. Yeah, the claims for national security or some of these are pretty weak. So then that's what you kind of wonder how long that will go out there. Again, I think that's some of the uncertainty that we're all sitting with. Also, are some U.S. companies taking advantage of the tariff hype and just raising their prices to gain more profit?
I think the answer to this is almost certainly yes. And the Fed has something called the Beige Book, where they go around and they talk to companies and ask what's going on. And it's pretty clear if you read that some companies are saying, well, I'm actually not affected by tariffs. But since everyone's talking about tariffs and talking about higher prices, maybe I could just raise my price a little bit. It's a little hard to prove this because companies, as you can imagine, don't want to justify their raising prices on tariffs which don't affect their specific company. But I think the answer is likely yes, though not at a significant rate yet, because the thing holding back companies are whether their competitors are doing or not. And if their competitors aren't doing it, they don't want to get too far ahead. So I guess I would say a little bit yes. We'll see if it continues in the months ahead.
Yeah, and again, there's so many things. We could have spent an hour just on tariffs, but it makes me think about all these companies that stocked up ahead of potential tariffs. I mean, there's been a lot of also shipped to other countries that don't have the tariff. There are several things that have gone on that maybe keep them from raising their prices that in a normal economic model, we would have seen these prices going up right now. Do you agree?
Okay. I agree with that. There's all kinds of different dynamics at play with tariffs, which are hard to parse through in real time. We didn't talk about this a lot, but the de minimis tariff, this means that packages valued under $800 are now tariffed. We never used to have that in the United States. If anyone does fast fashion, shops on Amazon, Shein, and Temu, and these companies in China, might buy a couple things for $5 or $10, all of that's tariff now. So all of these things are changing the way global supply chains are built, but it's happening in real time, and we don't have great data to understand the ripple effects of it just yet. We will come back in 6 months. I'm happy to chat again, and maybe we'll know a lot more.
Hey, I'm game for that. One more here, and then I'll see out here in our audience. How might AI, can you slide down just a little? How might AI be used or affect crypto?
Yeah, this is a really interesting question. And I will say that Jay Powell, chair of the Federal Reserve, has said the thing that keeps him up at night is not inflation, it's cybersecurity. It's an interesting comment. Now, this was made a year ago, so maybe given all the things that have happened since between President Trump and Jay Powell, he feels different about that. But at least as of a year ago, he was worried about cybersecurity. And why is that? It's because AI's ability with quantum computing to hack systems across the world, including on currency, and what I think is some of our most important national security systems, our payment systems in the United States, is increasing its threat every single day. And so the ability to destabilize the entire global economy overnight through a hack, God forbid, in our Federal Reserve or another financial system would cause a global economic market meltdown. And so these are things that have raised in terms of their risk profile in recent years. And AI on the risk side is a factor of that. AI, of course, on the positive side can help defend against it as well. But these are things central banks and banks never used to have to think about that they are now spending a lot of time focused on.
All right. Questions here?
If not, there is another question.
What are some of the flaws in the global trading system that have so badly affected the United States over the years that we have to add all these tariffs on now?
Yeah, I think the primary grievance that the Trump administration would say, and many would agree with, was China's taking advantage of the trade rules, meaning that their ascension to the World Trade Organization in 2001 was supposed to come with a range of increased responsibilities in terms of intellectual property protection that they did not adhere to. And I think that's a fair grievance when you look at the track record here over 20 and 25 years. Now, others would say, and I think the Chinese would respond, is this is typical of emerging markets as they're growing their economies. And it's true that there's some adoption of different countries' technologies and importing of that tech, but this is what all countries do, and we are no different. I think that would be China's best response to that. But the grievance essentially is that a lot of countries, but primarily China, took advantage to enjoy the benefits of low tariffs around the world, but didn't play by the rules that we had to play by in the United States. Even if you agree with that, I think it's a very open question whether tariffs are the right solution to that problem.
That is an area we're going to talk about in November too, because we're going to look at what caused Americans to kind of turn against globalization. And I think, definitely the key was bringing China in, hoping it would follow the rules. But the dumping and the subsidies for businesses has made it really difficult in a lot of competition. So yeah, you were right when you opened. There are some very legitimate problems that needed to be addressed, but we've probably gone maybe too far, in one direction. Anyway, okay, a couple other questions here. What happens when all Bitcoins are mined?
Well, we don't know. No one knows. This is a great question. No one really knows. There's all kinds of theories. They would open up a new kind of Bitcoin, supplemental Bitcoin B sort of tranche that would open up. Or no, the value of Bitcoin would just increase because there would be no more left to mine. It's a great mystery in the crypto sphere of what will happen when there's none left to mine. No one knows. And I think part of the value of Bitcoin is actually centered around the mystery of not knowing what's at the end of the rainbow here.
All right, great. How would you imagine crypto stable coins affect the U.S. economy if other countries like China adopt it fully and we have not?
Yeah, well, this is something we spend a lot of time on here at the council. And so China is developing a central bank digital currency. They have 300 million users right now. So even though it's in pilot, because there's 1 billion people in China, that's a very large pilot when you think of 300 million users. What China is able to do with its central bank digital currency is incredibly important from a technological perspective. There are things you can do with central bank digital currency in terms of making sure you only spend money, for example, in an 8 square block radius or only in certain areas. It allows for a lot of technological control over money. And my concern is that if the US doesn't play more of a role here, that China will set international standards in this space and that other countries will adopt China's technology, which is not something we would want here. So I think it's incumbent on the US to play a very big role in international standards around these assets. The US says we have an answer, that's stable coins, but of course stable coins are privately issued. Central bank digital currencies are issued by the central bank. They're not one for one. And I think digital currency wars actually are going to define a lot of the next decade ahead. What kind of money are we using? It's going to look very different the way you pay for things now than the way you pay for things 5 or 10 years from now.
Sounds like we're going to be in contact a lot then to learn more. One more question? Anyone here? All right. Well, great. Josh, thank you so much. I found it very informative, and I hope our audience, both here and on Zoom, did as well. If here in house, we could give him a round of applause. And I don't know, you won't be able to hear the ones that are on Zoom. I think we have about 35 or 40 on Zoom. So,
well, thank you for having me. Great questions. And hopefully next time we can do it in person if I can get out of Washington for a few hours.
Yeah, in fact, I'm going to be there with the World Affairs Council of America National Conference in November. So if I have any time, maybe we can work out something. You can get me more briefing. Let me also
That'd be
say,
great. Love to see you in person.
let me say too, Josh, if you ever have any articles or any links to anything that you think would be of particular help for us to understand any of this, please let me know, and we'll put it on our Facebook page or get it out to our members as well, because we appreciate the knowledge that you have.
Well, likewise, I'm happy to do that. And if there's anything that's happening in Illinois that you think's worthy, we should know here in Washington, because we can be very disconnected. We talk about tariffs and this big concept and 15% and 20%, but you mentioned Caterpillar, and I think this is a great example. And I think we just need to build up these channels even better to understand what's happening across the country with the shifting global trade system.
Well, if you're not a member yet of the Peoria Area World Affairs Council, I think everybody in here is, I encourage you to become a member at PAWAC.org. We have many exciting programs planned in the coming months, which I'm going to mention here. There are flyers for the next two events on the back table. On October 16th, we are partnering with the Peoria Women's Club for a film screening and discussion, Hitler's Reign of Terror by Cornelius Vanderbilt Jr. We are not taking political sides on this. You can make references, but it's just we felt this was an important film. We do see countries around the globe that are becoming more authoritarian. November 13th, The World We Made, How the U.S. Helped Shape the World After World War II and the Changing Role We Play Today. And as I mentioned earlier, we have Ambassador Mark Grossman, Ambassador Alina Romanowski, and acclaimed author James M. Lindsay, which will be here in the Bradley Student Center. And December 18th, The Future of Cuba via Zoom, and that's going to be me. I am leading a World Affairs Council trip, my 8th time to Cuba since 2014. On behalf of the Peoria Area World Affairs Council, the Turner Center for Entrepreneurship, and the Office of Global Studies and Initiatives at Bradley University, we thank them for this facility. Thank you, and we look forward to seeing you in October. And Josh, again, thank you so much, and I look forward to visiting with you again, staying in touch.
Likewise, great to meet you, great to be here, and thanks for having me.
All right.